Uh, uh, let's begin. Alhamdulillah wa salatu wa salam ala Rasulillah wa ala alihi wa ashabihi ajma'een. Amma ba'd, fa'udhu billahi minash shaitan rajim. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. Dear brothers and sisters from across the world, all of you who are interested in what's going on with the budget in India, this is a great opportunity for all of you to learn from some of the leaders when it comes to accounts practice, and investment advisory and those kind of areas. So we have experts from both the fields. We have CA Naveed Mullah, who's the lead at Naveed Mullah and Associates, and we have MS Shabbir Sahab from Hyderabad. Naveed Bhai is from Navi Mumbai in Maharashtra, and MS Shabbir Sahab is from Hyderabad. He is a financial advisor and runs a company called Sensage. So I'm glad to have both of you. Jazakallah for joining in, and inshallah we look forward to your inputs on this phenomenal budget that we've got today, which has driven the markets beyond control. First time ever in the history of the stock markets, perhaps, where we have seen a rally of 2,000 points in Sensex, 650 points in Nifty, and that's thanks to this kind of a budget. Just a quick introduction to begin with. So I am Ashraf Mohammadi. I am the CEO of Idafa Investments. We are in this field for the past 27 years, promoting Sharia compliant investments, investing the Sharia way. And I am the host for the day. And we have with us CA Naveed Mullah, who is a qualified practicing chartered accountant and a lawyer, having a rich experience of more than 15 years. He looks very young, but he comes with a lot of experience, mashallah. He heads the overall India and Middle East practice of Naveed Mullah and Associates and its group companies. They are into, besides accounts and audit and taxation, they are also into corporate advisory. He personally oversees international and local taxation along with corporate laws. He has also represented several tax cases at various levels in taxation hierarchy. So with a faceless tax regime that is coming in, let's see how things go for you. But we would like to hear a lot of these things presented in the budget today, and would like to understand from you. Right? We also a quick introduction of MS Shabbir Sahab. He owns and runs Sensage. Shabbir Sahab is an accomplished banker with 35 years of insightful experience in the field of personal banking, investment banking, private banking, and wealth management. The many feathers in his hat include being instrumental in the establishment of expatriate service desks and international relation centers for major West Asian banks. He quit his lucrative banking job in Oman to start fee-based wealth management in 2006. So on the wealth management front, let me also inform you that he is the first registered, SEBI registered investment advisor in India. So way back when this concept was very new, Shabbir Sahab had already made his first moves. He had registered as an investment advisor with SEBI, while the rest of us were thinking what to do with the new regime and new era coming in. So he was recently recognized and honored as India's most admired financial advisor by White Page India for his valuable contribution to the capital market industry. In his words, I believe strongly in helping shift how people think of money. Money is not a commodity by itself, but a means of exchange, says Shabbir Sahab. So that's a quick input for both Naveed Bhai, Shabbir Sahab, and we would quickly like to hear from Naveed Bhai as to his inputs, his thoughts on this budget. Please, Naveed bhai, over to you.
Assalamu alaikum viewers.
Salam.
Budget was supposed to be, that's what it was tipped, that it was supposed to be the best in 100 years. I guess it was not the best in 100 years because there was not much change when it comes to the previous year, or a few exemptions or a few deductions which normally the middle class families look for. Yes, like normal budget, it was divided into part A and part B, where part A discussed about the collections and where the budget allocations will happen, and part B basically focused, which is my forte, about the direct tax, indirect tax, and how it will be impacting the direct tax proposals and indirect tax proposals. So this was the first budget of the decade, perhaps the first budget after the COVID 19 situation world over. There is a new world order now, and this budget after COVID crisis, there were many pre-budgets which have kept on happening every month, every 15, 20 days or 2 months. There was something or the other which the government was offering. So this was just the continuation of all those budgets which happened in the last year. So this budget was supposed to be the best in the last 100 years. But I guess the finance minister, what she meant was nothing of this sort has happened. I mean, such times wherein the entire world was suffering, the entire businesses, the economies, everywhere there were problems. And in such times, this is something which is very extraordinary. I think that is what she meant. It is not got to do something with the 100 years, best in the 100 years. At least I have come across so many budgets which were far more better than this one. But there were a lot of positives from this budget. Firstly, the budget was focused on, it was resting on 6 pillars basically. So it was divided into categorized into 6 major parts. It was health and well-being, of course, because of COVID. It was given specific importance. Physical and financial capital and infrastructure, inclusive development for aspirational India. That is where we would see a lot of inequality, the bridging happening. Reinvigorating human capital, innovation and R&D, and last, minimum government and maximum governance. This is very important, and I'll speak about minimum government and maximum governance later on. Now there were various like the budget, like GST collections. The government estimates at least 15 lakh crores in a year. Recently, in the month of Jan, government collected 1.2 lakhs, which was highest since the GST got implemented after a long time. So the collections are back on track. I guess this has got to do with, because a lot of assessments, lot of investigations, search, seizures were happening in the last couple of months because government had to meet those targets. So that is the reason, one of the reasons that GST collections were again back to the expectations that they had. I will touch more upon the part B, that is the direct tax proposals as well as the indirect tax proposals. Now, in direct tax proposals, when it comes to the slab rates were the same. They didn't touch much on that. So they were exactly the same what were before, like the new tax regime and the new old tax regime, wherein it was up to 2,50,000. The taxation was 0%, and it was kept the same. 2,50,000 to 5 lakhs. If you're earning anywhere between 2,50,000 to 5 lakhs, it was in the old regime, and the new regime again it was kept 5%. It was the same. From 5 lakh to 7,50,000 in the old regime it is 20%. The new regime, which was already there, was 10%. Again, from 7,50,000 to 10 lakhs, the slab rates were 20%. From 10 lakhs to 12 lakh 50,000, the tax slab rates went on up to 30%, and whatever is above that was 30%. So the basic slab rates is normally something which normally all the salaried employees and business class people, they are more worried upon, especially the business class, especially the salaried class people, and they did not touch on that. This, I actually personally felt that there might be a wealth tax which might be brought in again. Like we have our own zakat system which talks about wealth tax. This bridges the gap between the rich and the poor. This is the only means which can bridge the gap between the rich and the poor. So this was something which I felt that it might be bought again, but then unfortunately this was not bought. Fortunately for rich people, they are happy that wealth tax was not there. The other thing was, I was expecting maybe a COVID cess or a COVID surcharge before the budget. this is something which didn't happen. So it is, in a way, you can say you are happy that at least this kind of tax did not come. We have a lot of cess, like recently we had Swachh Bharat cess, Kisan, Swachh Bharat cess and Kisan cess. Now I thought that they will come up with COVID cess also, but luckily that COVID cess also did not come up. What they have done is basically they have eased, they want to increase the ranking of India and ease of doing business. So in that line, what they have, all the policies, all the decisions that they have made is already in that line. So when I speak about direct tax proposals, so there was already faceless assessments which were happening, but this was too early for them to start with faceless assessment with the tribunals also. This is the second appeal. So when you lose a case with the income tax authorities, you go and appeal. The authorities which are handling the case, the scrutinies and the litigations, they were already faceless. They made the appeals, CIT appeals, Commissioner Income Tax appeals, that also has been made faceless. Now in this budget, they have made even the tribunal cases, that is the second appeal above, just before the High Court, even that has been made faceless. Now till the time, a lot of writ petitions have been filed in the High Court, till the time the feedbacks don't come from how things are happening and how things are, whether their SSCs are harassed, or what is happening with the cases which has already been assigned for faceless assessment. I thought the government was quite a bit in a hurry. They should have waited for another year, uh, get the assessments, what is happening with the income tax appeals, and then go for probably for faceless ITAT. Then for NRIs, there is a relaxation. Normally, what happens is you retire, you come in the month of say Feb or March, and your proceeds, the voluntary retirement or whatever proceeds that you have earned over there from your employer, you tend to get it in the next financial year. So there was a lot of confusion what will happen to the such kind of money. So there is a little bit of relief for those the such money which comes in the next financial year when your status is not necessarily NRI. So even that will not be taxed. And then a lot of steps were announced for affordable rental housing, which was already there, the 1,50,000 which comes under 80EE, additional interest that you pay on your house that you buy in affordable housing. Even that has been extended by a year. They have removed the they have reduced the number of years for reopening of the old cases, which gets opened under section 147 and 148 respectively, where the income has escaped and the officer is of the opinion that no, these cases have to be reopened. So now these cases cannot be reopened after the end of the assessment year till 3 years. Earlier it was 6 years. So after the end of the assessment year, 6 years after that, anytime the cases could have been opened. Now that has been reduced to 3 years. That means the government wants the officers to focus on what is there in hand and not something which is very past, very old. They don't want to get into litigations. Basically, they want to reduce the litigations. Even with the Vivad se Vishwas, they have increased it to another month. So that's what they are saying. You come, if you are under appeal, just come pay the basic tax. There'll be a complete waiver of interest and penalties. They just want to reduce the number of cases which are already in dispute. Then they set up a lot of dispute resolution, will be a lot of dispute resolution panels will be set up, wherein taxpayers having income, small taxpayers, they can approach the dispute resolution panel and get their cases settled quickly in a very amicable manner. Then again, with these things, like reopening of the assessment, the faceless things, the dispute resolution panels, I think the compliance burden when it comes to the senior citizens also, if you're above 75 years of age, and if you have your income is only interest income and pension income, you don't have to file your returns. It will be auto-populated. When you go to file your returns, your this income and interest income and even capital gains to an extent, that will be auto-populated in your returns. So you don't have to do much over there. So they will be saved from filing their returns if you're a senior citizen above 75 years of age and having only pension and interest income. Then there was a few, the TDS which was there on earlier, which was there on dividend, even that has been removed. It was not there since it has been carried forward now. The dividend distribution tax, the TDS, which was there, which used to be get deducted on the dividend part. And when you get the TDS, when you get the advance, when you get the dividend, you have to pay some advance tax. When you have to pay the advance tax, normally it is pro rata for the entire year. Here also there is some relief for paying of advance tax. What will happen is when you get the amount in your account, it is the advance tax will get calculated afterwards. It will not be calculated for pro rata until unless you don't ascertain what the actual amount of dividend is. Apart from that, I felt a lot of customs duties were raised. A lot of custom duties were raised to ensure that local production, local manufacturing, make in India gets more boost and we don't import more. So this is one general statement that which I will make. There were various commodities which were hiked, various commodities were discouraged. So in general, the what the department wanted, what the government wanted is the department to raise the custom duties on certain commodities so that we uh, encourage our own production and our own people and our own businesses, so that there is more make in India happening and less of imports are happening. And when it comes to indirect tax proposals, the GST collections, as I said, a lot of GST. In fact, last month, a couple of my clients got raided by the GST department just because they filed nil returns, and they wanted to comply with the filing of nil returns, because the client with which they were dealing, and they were of the opinion that you are not filing a return, so we'll stop your payments. So in just to save that, they just filed nil returns. Now the department doesn't want this to happen. The department doesn't want fake bill or invoices to be generated. So they are going very hard on such SSEs who are doing some kind of tax saving or something when it comes to GST. So that is the one of the reasons that the GST collections are high. So overall, the budget did not have much as it was expected that it was best in the 100 years. These were the basic things which should impact majority of the people, especially the middle class people, what has happened with this budget. And I think this is the summary of the budget, what I could point down on my whatever I came across, which should be of relevance for majority of the people.
Sure. Yeah. Yeah. Thank you so much. This makes a lot of sense. A brief synopsis of what actually happened, but we'll go in depth and understand things, specific things in detail as we go forward with the discussion. At this point, I would like to invite Shabbir Sahab for his inputs, and we would like to hear from you more from an individual investor's perspective. You being an advisor, you always have the individual investors in mind. So from that perspective, what is it that the budget offers to the investors? So let's hear from you. Please take over. You can share your presentation as well if you have.
I would take a little time to make the presentation, but let me first, Assalamu alaikum everybody. Thank you Ashraf and Idapa Investment for inviting me on their forum, for sharing my views on the budget. I personally look into from a personal individual angle as to how it affects our daily life. While David has looked into the macro kind of a thing, what it means to me is that how do the individual investors, what is the impact on the individual investors when the budget is released? First of all, let me first start with a comment to say that let's examine and have a self-searching to find out what is important for us, whether it's the union budget or the family budget. Because union budget is something which we don't understand. Many of us, the layman doesn't understand. It is for the country. Yes, it is important. But more important than that, in my view, it is the family budget. While we so keenly look at the TVs, glare ourselves to the TVs, what the finance minister is doing, what bag she's carrying, whether she's a pink bag or a leather bag, what she's going to say, people stop from work and trying to hear and pick up the points. My advice and my question to all my investors is, have you prepared your family budget ever? If you have prepared ever, have you reviewed it from time to time? If not from time to time, at least once in a year when the union budget is released. That is going to help you in your financial goals rather than the union budget. So with that, I begin and then say that another observation of mine for the union budgets is whenever a union budget is, or Deepavali, on a Deepavali day, My investors always are glued to the screen in the stock market. They are ready with what do you call that, off-market orders. They try to see it, and then the what do you call that, the market tips keep coming to say, उसने ये अनाउंस किया, अब ये खरीद लो, ये बेच डालो, नीचे जाएगा. My thinking is that a lot of people take an impulse, they take an impulsive reaction to their budget. That should not happen, because a budget is something which we are planning it. We need to decipher, we need to assimilate it, we need to digest it, and then take a view on the budget, rather than taking spontaneous decisions as to which sector is going to do well and which are the market, which are the stocks which are going up. What you need to know is how it affects your personal life, and more importantly, your portfolio investment. So as Naveed said, everybody knows, everybody's happy, let's enjoy and then celebrate that there's no taxes, there's no change in the tax rates. But when it comes to senior citizens, probably most of the politicians have become senior, and this is a time when they have given a little view and some consideration to the seniors who are above 75. I've heard in politics to say that there should be change of guard from the seniors to the juniors. So probably they are looking for, along with them, they are looking to the financial planning or the pension plans for the seniors who are above 75. Now, I wouldn't call it 75 as a senior one. I would probably call them super seniors, because seniors I would consider as those who are above 60. Now, what have they given? They have said that they don't need to file the returns if they are pensioners and if they are getting only pension. What I'm not sure is whether the dividend income is also exempted or interest is also exempted. Because most of the seniors either depend on the dividend income in the stocks, or those who believe that fixed income or safe income should be in the banks only, whether they survive on the interest. So whether these two are included or not, we do not know. We will have to wait, look into the fine prints, and then come out with that decision. Till then, let's say that the government employees who have got pensions, they can celebrate, and we need to have a wait and watch situation. The next one that I have found is the DICGC is being structured in a better way. What is DICGC? Let's try to first understand. Deposit Insurance Credit Guarantee Corporation. There's a misconception in the minds of the layman or the investors say bank deposits are risk-free. Although of late they've started realizing that even the bank deposit is not safe. They get jitters when they hear any news like PFC or some other bank. Another view of the investors has always been that the nationalized banks are much more safer when compared to the private banks or the foreign banks. So here I would like to clarify that DICGC is for all scheduled banks, irrespective of whether it's a foreign bank, Indian bank, or a government or a public sector bank. There's also a misconception that State Bank of India mein paisa rakha to safe hai. I would say, how should I put it? I would say the biggest risk is where the home is. If State Bank of India is your biggest bank, then I feel that is the biggest risk. But it doesn't mean to say that State Bank of India depositors are safe. The Deposit Insurance Credit Guarantee Corporation was giving a kind of an insurance coverage for depositors, whether he is a public sector bank or a private sector bank, up to an amount of rupees 1 lakh. That is only on liquidation of the bank. That is when the bank closes down. Now, let me give a little explanation here. Suppose if it was a Standard Chartered Bank, which is registered outside, or a foreign bank, or a DBS bank, and they have a branch in India, and you have a deposit in DBS India, then you are covered. A Bank of Baroda, where if it's got a branch in London, deposits of that Bank of Baroda outside London are not covered. So what has happened is that 1 lakh insurance coverage which was there, or protection which was there for the investors, last year they have enhanced it from 1 lakh to 5 lakhs. Now, in this budget, what they have said is that they are going to restructure and then see how the investors are put in a comfortable zone. What it means is that the moratorium which comes normally to say that you cannot withdraw more than 10,000 or 25,000 till RBI takes some decision, those are the areas where they are going to give some ease. Another aspect of in the budget which I have seen is a social security for platform or e-commerce employees. They were not covered, and in this budget they have provided for the e-commerce workers where they will get ESI, like the employee state insurance coverage. They would be entitled for employees provident fund. They would have a minimum wage, and also women would have an equal right and they can work for all shifts. This is something for the ladies to give them empowerment to them. Then, as I think Naveed has already covered, that there are faceless assessments. From the investor's point of view, from the tax filer's point of view, I can say that this financial year, when we had to file the returns, there was a lot of enormous work for the chartered accountants or the tax filers to do, especially in terms of calculating the capital gains, where they wanted an inventory of all the transactions in the equity and the mutual funds. The announcement that there will be a pre-filled form from next year should ease for the investors and for the individual tax filers. The other thing is about the settlement or within for small payers when they go to the tribunal is also welcome. I think that should also welcome. Another area from the corporate point of view which I have seen is that companies or corporates who have got a turnover of 10,000 crores, correct me, Naveed, if I'm mistaken, they do not have to do a tax audit. That's a big relief. That's a big relief, especially to small investors, small entrepreneurs, where especially in our community, there are 60% of people who are into the non-organized or unorganized sector. Their turnovers are small and they will be happy. Am I right, Naveed? About
yeah, but this comes with a rider that your total cash transaction should be less than 5%.
digital.
And majority of our people deal in cash. They would like to, so they basically what they're saying is they're encouraging digital economy completely. Come and complete digital transaction.
That's a good point that you have raised. I have some comment on this also. Many of our people have not been using digital payment system. They are not even aware of how to do the internet banking. And I would say here that it is better to have internet banking transactions that would take you again to the budgeting kind of a thing that I said. It will give you an opportunity to see where you have spent the money, and then you can correct and check yourself. So another area where we need to look into our individuals should be to see that they make the payments as far as possible. We do not have any cash payment. Most of us do not have any cash transactions. I mean the income part of it, but when the spending is there, we do not record it. So in fact, what we do is whenever we onboard a client, we ask them to prepare a data collection sheet, which basically gives their personal details and also what are the investments, what are the expenses. Many people find it difficult to complete that only because they have no idea. Another one which I have seen in the individual investors is they're all mental calculators. I think if we can learn how to use a time value calculator, TVM calculator, it helps a lot. This is another area from the personal investment side of it. Then there's another thing which I have liked, I'm very hopeful of it, is a zero coupon bonds for the infrastructure. This is very attractive, and I hope there is something for the faith-based investors. The reason why I am saying faith-based investors is that faith-based investors have no opportunities to make an investment in an ethical way as per their Islamic beliefs. There's one ETF which was there under Rajiv Gandhi scheme, I forget the name of the scheme, Rajiv Gandhi scheme, people didn't know about it, they were not aware. And so people have not invested there. So I hope if it is a zero bond scheme, there will be an opportunity for the investors to make investment in a Sharia compliant way and take benefit of the taxes. As far as the NRIs is concerned, the time which is Naveed has already covered on that. And I think what they are trying to do is the NRIs who have returned from abroad, they have been having difficulty in getting credit for the double taxation tax paid. So I think the government, what they are planning to do is ease and then help them out in adjusting the credits which were there extended to them. The other is a affordable housing interest exemption, which has been extended till March 2022, and also for the affordable housing budgets, housing projects which were there. The FDI increase in insurance is another area where they have increased from 49 to 70%. Now, this is a very important area. While we do not believe in the insurance, what we see is that it is going to expand well, and it is going to be positive for the health market. We'll discuss in detail a little later about how it helps in the health market, what is the importance of health market. But for the time being, I feel that insurance products, direct insurance is going to help. Another area where the biggest surprise has come in the fine print is that ULIP premiums, that is unit linked insurance plan premiums, where the premium is above 2.5 lakhs, is now taxable. I don't know how many investors realize it, that there's a difference between ULIP and investment. What is ULIP? ULIP is an investment product where an insurance company sells it. A basic thing that we need to understand is that no insurance company is allowed to come out with a product which is pure insurance, without insurance. Insurance is a hard sell. Suppose if I say that you need to pay me for 25 years and you will get money only when you die, how many people will make an investment? How many people will subscribe to it? That is the reason why insurance people have stepped on the investment products and come out with the combined product where a small amount of the premium goes towards the insurance or purchasing the risk, and the bigger portion of it goes into the investment. Now, there has been a disproportionate, a disparity between the insurance industry and the investment industry. SEBI has always been saying that there has to be a uniform code kind of a thing in terms of investment for the products. But for some reason, the government has always been giving favor to the insurance industry. What it means now is that if in practice, what was happening is insurance industry was asking for 10,000 premium or 5 lakhs of premium for 5 years and coming out with a ULIP product. And all this was tax-free. Even at the time of maturity, it was tax-free. Now what they have said, as compared to that, if 80 to 85% of your amount is going into investment and it becomes tax-free because of an insurance product, the same product, if it is sold as a pure investment through either a mutual fund or a stock investment, they do not have the tax benefit. Now that discrepancy has been set right, where they said that ULIP premiums above 2.5 lakhs are now taxable. But this will be effective from 1st February itself. What will happen now, and where we need to be cautious is that agents will now start selling these insurance or ULIPs in smaller denominations rather than 2.5 lakhs or 5 lakhs. That is where investors need to be careful. The other one is that voluntary vehicle scrapping policy. Now, this is a boost to the auto sector, but from the individual point of view, from the investor point of view, I think it's going to create a hardship, because there are a lot of people who have got old vehicles, and probably I would have preferred if they had done something for testing the vehicles. If it is fit, it should continue. So there has to be a burden on the low income group and the middle income group. Another kind of thing which is on the asset class is the gold, where the import duty has been reduced down from 12.5 to 10%. What will be the impact on this? The impact of this, we've already seen that the gold prices will come down. But as an investment advisor, where we have for the faith-based investors, for the community who do not believe in debt, I think we cannot afford to go out of the gold. Gold is a currency, is something like a currency for us, and we should increase our exposure to gold. And in the coming years, when there's a free printing of the currency notes throughout the world, I would suggest that we have a higher allocation to gold. With this, and then I think what is going to be expensive from the investor's point of view is mobile phones. Mobile phones, the batteries components where it was tax-free so far, some of the components, they have added some duty on that of about 2.5% is going to be charged on certain components. And so this is going to become expensive. The other thing where I have seen is that the relief for trusts and charitables for running hospitals, that relief has been increased from 1 crore to 5 crore. What does this mean? It means that most of the educational institutions or societies or the trusts or the NGOs who are running the educational institutions, they will have an opportunity to give quality kind of an education. They will have an opportunity to give a high-tech opportunity, especially after this COVID, where things are going to change dramatically how you impart the education. So that's an opportunity for them. Similar is the case of hospitals, where it's an opportunity for the doctors, people in the profession of doctors, to come out with small polyclinics and have their own entrepreneurial kind of a thing for the thing. I think there is an allocation of about 66% of the GDP for education, digital and entrepreneurial education. This comes handy if you combine it along with the education relief and the hospital relief. So I think this is my small kind of a thinking. Probably we'll have to look into more when it comes to the fine prints. And if there is anything else, we can talk about it.
Right, Jazakallah khair. That was pretty well covered. So all the issues with respect to individual investors have been covered well by Shabbir Sahab. There were a few questions, so we'll just take a few of those relevant questions first, which were relevant to the subject which was going on. So, there's one question about retrospective scrutiny. So old cases and the current system, the authorities can go back to up to 6 years for scrutiny, but now that has changed to 3 years. So how would that be beneficial, and are there any strings attached on that? So Naveed Bhai, if you can just share on that.
Yeah, this is very important actually. I keep handling such cases which get reopened under section 147, 148. These are the sections. 149, the notice how it is issued. So now what the rule says is, earlier the rule was end of the assessment year, after the end of the assessment year, till 6 years. So say 12-13, financial year 12-13 assessment year is 13-14. Now 13-14 assessment year ends on 31st of March 2014. 6 years after that, so 31st of March 2020, these cases can be reopened at any time, even if already a assessment has already happened and under normal circumstances, under 143.3, 143.2. So even in that case, those cases can be reopened. Now what they have done is they have restricted the number of years from 6 to 3. What they are expecting is, let's not harass, let's not go and hunt people, let's not go in the past, rather focused our resources more. And these small cases, these are all small cases, majority of the cases get settled. Majority of the cases, nothing comes in the government's hand. So the government doesn't want to put their resources more on the past years, rather the government wants to focus on the current year, because one who has filed now will be in a position to pay some taxes if in case there is an interest or liability, and it's fresh in the minds of the SSE also what has happened and what could happen. So it's good in a way because they don't want to go too much back. Yes, the one other thing was if in case there is a fraud or there is major concealment, in that case this restriction of 6 years was 10 years and it is still there. But there is a rider over there that the amount of concealment of income should be at least 50 lakhs. So if the amount of concealment is say meager, say 12 lakhs, 10 lakhs or 8 lakhs, then they can't be opened under this section after 10 years. So the case, even if you have done something wrong, the department cannot reopen the cases and make your assessment and make you pay any liabilities or penalties or interest, whatever the amount is. So even if you're wrong and that time has elapsed, so you need not worry about it. Why? Because the income which has escaped is less than 50 lakhs. So this is a good in a way. It is a good in a way.
Right. So that's very practical, coming straight from a CA's mouth. So it makes a lot of sense as well.
There will be a lot of less business for CAs, but a lot of headache will be gone actually.
All right. Perfect. All right. Quickly, let's take the other question. So there was one question from Dr. Shanwaz Kazi. What are the implications for single owner versus LLP? And then he also has another question that what are the benefits for senior citizen? How does the budget help them? So although we discussed it, if you can just throw some more light on that, that would be great.
You want me to answer this one?
Yeah, no, you can go ahead.
Okay. See, one person company, in fact, I had written it down during the course of, someone asked actually on the Facebook and I replied. So I actually jotted it down. So majority of the Muslims, what they do, majority of the people normally who are not so much well aware of the laws and everything, what people do is they open proprietorships. The biggest drawback of having a proprietorship is limited liability. It has unlimited liability. So what we encourage people is to go for a private limited company or an LLP. OPC had certain restrictions, like the paid up capital should be less than, or the turnover should be less than in the past 3 consecutive years. There were some restrictions. If you exceed that, you by default have to convert an OPC into a private limited company. So eventually they have to bring someone as a partner or a shareholder or director from your family or a friend. Someone has to be there. So they didn't want the control to be going outside. They just wanted to be like a proprietorship, but with limited liability. Like right now, when I am doing practice in Bahrain also, they have this concept called single person company. Now in the entire Middle East, only Bahrain had this concept called single person. Then they abolished it. They said we will call WLL only, but there will be only one director. So they kept that, they gave that option to open a company with a single person company, but that will be called WLL with limited liability. So more world over, everyone wants. Now if you open an OPC, you will have to register it with the MCA, the Ministry of Corporate Affairs, the ROC, and your books will be without, there will be no corporate wheel, and your books can be scrutinized by anyone, any vendor, any creditor, any debtor, or any of your clients can see your books, your financials. It's there in the public domain. Even the bankers can see if they're lending something. So that is more transparent. And from that perspective, that it is limited liability, I would encourage people to go for OPC rather open a proprietorship. Now what happens is proprietorship doesn't have their own PAN card, but OPCs, you can open 10 OPCs. They have 10 PAN cards, get 10 separate assessments. So you will have benefits in all the companies, and all your companies have different liability. So if one company, any problem happens, your personal assets won't be liquidated. So that's the reason that our community and everyone who has proprietorship, they should go for OPC. OPC is something which is very beneficial in the long run, especially now that they don't have any restrictions in place. One restriction was there for non-residents, that you have to be a resident in India and your residential number of days that you stay in India should be more than 182 days. Now even that has been lowered to 120 days. So someone who is staying in India for more than 120 days can also open an OPC, one-person company.
Right. So that's a great idea. OPC is something relatively new, and using that as an identity, as a corporate identity, it gives you an edge and of course limited liability and so on. You said you can open 10 OPCs. Would the CA charge separately for each OPC or how would it?
Every PAN number is a separate work for us. Every return filing, every audits. Yeah, of course you'll get some benefits with the charges wherein there are economies of scale for chartered accountants. Maybe that.
Exactly. All right.
Ashraf, with the enhancement of the limit, for audit and the digitization, we need that Naveed has to get some new customers, and so we should allow him to charge on that because he'll have to look out for new clients now. Am I right, Naveed?
Majority of my client, they are not keen with the digital payments any which way, so they are still in the slab rate of 1 crore.
Okay.
Because they have more cash payments as well.
So it means that if you can get into the digital one, you can save on the audit, fee.
Yes. In fact, it's easier for me to certify balance sheets which are completely digitally. Everything is
I agree. I think that's the way forward. I think that's where everybody has to be. Whether you're an individual or a company, digitization is something which you cannot escape for, and you need to keep on.
Sure. Perfect. All right, Shabbir Saab, there is a question for you, and Dr. Shanwaz is again asking, can you give more clarity on entrepreneurship with respect to, you mentioned about NGOs and charitable hospitals and educational institutions, they getting some benefits. So if you can just give some clarity on that.
Yeah, I will give you, I will share with you what I have a thought in mind. Probably Naveed can come in, if I have, if there's something where I'm missing out, is that a lot of these educational institutions like schools, colleges, they are run by charitable trusts or NGOs. Okay. Similarly, is the hospitals which run. So far, the relief was up to 1 crore. Am I right, Naveed? It was 1 crore. Now that relief has been increased to 5 crores. So which means that you can equip the schools with more tech, instruments and the way you communicate and educate, and then we can take it forward. This is another opportunity where our community has not used this, especially on the madrasas and the other schools which are into the rural areas. Rural development is where the thrust is going to be, and a lot of people have not used this opportunity. What I'm trying to say is, when the relief has been increased from 1 crore to 5 crores, you should not think of just opening more schools and branches. You should think of how we can make it tech savvy and then get into the new system of how you educate. Maybe by getting the Zoom equipment, the hardware that is required for that. Similarly, when you talk about hospitals or for the doctors, I know of a case, a group of doctors or entrepreneurs in Bombay, they have formed a hospital and they combine the CSR, CSR and the how we can help these socially, how we can have a social cause by transferring the amount to CSR and then getting it back with the concessional fee. Now that limit, I think I'll have to explain it a little more, probably off the line we can take it. Probably it's interest only to the doctors who can take it offline, but there are opportunities. What I'm trying to say is there are opportunities where doctors can set up their own small clinics, diagnostic centers, have a tie-up for collection, and then take advantage by setting up a charitable trust or NGOs. That's what I would say.
All right, perfect. Naveed bhai, would you like to add something to this?
No, I think he has summed it up very well.
Right, great. Perfect. Another question was about Sharia compliant tax saving schemes, although this is not about the budget anymore, but people are interested to know. So maybe both of you can quickly give some of your inputs on how can people save taxes the Sharia way.
Yeah, right. Can I give?
I think Shabbir bhai should be better to answer, but in a better position to answer this one.
Right.
I don't see, there's not much difference over there, right, Shabbir bhai?
No. I will tell you what we're doing. As a practitioner, we, last 14 years, what we're trying is to migrate people from the conventional to the Sharia-based investment. And one of the concessions, not concessions actually, one of the advices that we are giving is that investors, because they have no opportunities, they have to pay zakat, and there's no tax saving scheme. What we were saying is that you can invest into ELSS. Now, recently, I have done some study and research and found out that if you invest 1,50,000 under ELSS, there's a lock-in for 3 years. The tax benefit that you get is roughly about 42,600 or so, but that 42,600 is a benefit of tax that you get for 1 year, whereas the investment is locked for 3 years. So if 1,50,000, after 3 years, the maturity value of that tax savings is, let's say, 2,10,000, then you need to do the purging because there are some interest component to that. And then from 2,10,000, you need to do the purging and remove the interest. So if you remove the interest part of it, on maturity, we have found out that you will be at a loss and you'll be better off by paying 42,600 or whatever the tax is. And then the remaining amount, you invest into a Sharia compliant, low risk, something like an ETF. Now, the key here is discipline of locking your investment for 3 years. Since there are no opportunities which are tax savings for people, do you know how many taxpayers are there from the community? Among the 20 crore Muslims, taxpayers are 6 lakhs. And these 6 lakh people have no opportunity to make tax saving schemes according to their Islamic principles. So if it is not there, there are some other opportunities which are there and you should be adopting them. One way is on the ELSS. This is my view, that we have stopped advising our investors to get into the ELSS. Rather than instead of that, they can put into the ETF, the Sharia ETF, and be disciplined to keep it locked in for 3 years. You are better off. I think that's on the tax savings. That's my view on the tax savings.
Right, perfect. Naveed bhai, if you can just throw some light on this strategy. Actually, this is the strategy that we used to follow earlier on, but there was a strong demand from those who, salaried class. They end up paying, working 4 months for the government. The tax is just taken away. So there was a strong demand from them that we need something, we need a product. It looks so stupid that we go back to the HR and say we have no option, so cut the taxes. So that's how we, and we realized that a lot of people are putting away 100% of their funds in term insurance plans or endowment plans, etc., where, it's a bigger problem. So we adopted a smaller problem, but I think this makes sense.
I think Ashraf, the problem is within us. I would put it the other way. The reason why I'm saying it, see, we have such a large community. The products are available which are Sharia compliant. There's no way how we are not utilizing those. So unless you show the power of investment, no manufacturer will come out with that product.
Mm-hmm.
Now,
right.
just imagine that 35,000 investors in Sharia compliant investment, where the investment is more than 36 lakh crores, 2,100 schemes, only 2 Sharia compliant mutual funds, number of investors 35,000. Compare this with 6 lakh payers, taxpayers.
Mm-hmm.
So we talk about it. Sharia compliance, Islamic banking kab aa raha hai, is restricted to our drawing rooms. This is where we need to give a little thought to it. If you start making an investment, the products will come. I know I speak with many CEOs of AMCs. They say, "So called leke aao na, my product batata hu." So what we need to show him is the money, the investment, the belief that this is what we can do, and the gates are open.
Fair enough. All right, Naveed bhai, your ideas on this?
I think the last part which he touched on, we don't have that bargaining power. We need to have that bargaining power. We need to have that kind of an pool which we can create amongst the community, where we can say that this is what we have pulled in and this is what we have as a community, And definitely there'll be some of the other community which will automatically the government will work for the community, because there'll be a big pool we can play with, and this is where we can show that this is the amount of money that can be brought in by this community. So for that from that perspective, probably I think first step is to to have that bargaining power. We need to create that pool of that sort. uh, on an individual level, we cannot expect much from the government that the government is going to do for a case to case basis. Probably we will have to have some kind of a study or a research that the capacity of uh, Muslims as a community, what they can, what they have to offer. And
Right.
maybe like Shabir Bhai said, 100 crores or 1,000 crores or 10,000 crores. If we have that kind of pool, and probably we'll have that bargaining power, and government will be forced to. End of the day, even that is money, so they will they'll design some plans, make some plans for that to accommodate even this community.
Sure. I think sometimes in the future we'll have a special session on tax saving schemes and options, etc. We'll get some muftis on board, and it would be an interesting session because the community is really looking out for a very good solution on that front. The next question is,
Ashok bhai, I would like to interrupt over here. See,
yeah,
any which ways that amount is very less. ATC
it's
is
very
1.5
less actually.
lakhs.
Yeah,
Yes.
yeah.
And on 1.5 lakhs, you're only, if that too, if at all you are in for 30% slab rate, you're only going to save 45,000 tax. And you're taking a huge risk where you're going to invest. You're taking a huge risk in the company, the LIC. Now they're going to bring up the IPO of LIC. You don't know what's going to happen with those banks or with those institutions. So even that is a big risk. For saving 45,000, you're investing, and then there's a lock-in period. You have to invest for, say, period of 5 years, 10 years, 15 years. I've seen people, invest. They have exhausted their ATC, but just because the banker said it's a tax saving thing, they don't even calculate their amounts. They just go and invest it, and it's of no use.
I have an interesting slide here, Ashok, if you can permit me to say.
Yeah, please go ahead.
Sure. Can I, there is something called small cases, and I have done some study. Can I just go to one particular slide?
That's right.
And show.
Yeah, I was just coming to that because I know you are offering. Yeah, please.
Please go.
You have your option to share the screen. You can just go ahead and do that. Sure. There is a green icon saying share screen.
Live, I don't see green screen. Stop video, is there more? Okay, I'm not able to get that.
If you press on share, there is a green upward arrow and share screen written
no, I'm not. Once again, I'm not able to see that. Let me. Sorry for holding on. Oh, yes. Sorry. Okay. Can I share this? Yes. Okay. What I was trying to say is there are a lot of people who ask, what are the opportunities for Sharia compliant investors, So we have got something new which has happened where you can have, everybody knows there are two Sharia compliant mutual funds, there's Taurus and Tata, and then there's an ETF. What has come now in the market is something like, where SEBI has permitted small cases. Small cases is basically a basket of stocks or ETF, which you can subscribe and then buy it from a platform. That's what basically small cases are. So one of the things that I have done is that I have tried to see for a faith-based or a Muslims, what is their benchmark. Often people say that I don't take interest from my bank account and the money is lying in my bank account because there are no investment opportunities. Whatever interest I get, I give it in charity. Over and above that, 2.5%, there's a obligation for payment of zakat. So what is the opportunity where there is very low risk? What we have done is we have done a study of 3 ETFs. One is a Sharia ETF, second is a gold, and third is a Nifty IT ETF. So 3 ETFs, if you make an investment and then compare with CPI, which is what does an investor want? He wants to beat the inflation. He needs to do a zakat payment of 2.5. So is there any place where he can park the money where he can get the net of 2.5 zakat and the inflation rate? Can he make money and low risk? This is a chart where we have taken the benchmark as CPI plus zakat at 2.5, and then if you make an investment in 3 ETFs with an allocation 2 asset classes, that is 1 gold and equity, this is the result. It's a very low risk kind of a thing where you'll be able to cover, instead of putting money into the bank and then leaving it idle. This is something that you can think of. This is one option. A second option that we have worked out is, let's say, Sharia compliance. You'll be surprised to hear that Nifty Sharia ETF, which is nothing but Nifty 50 minus the companies which are non-compliant, if you had made an investment only into an ETF or an index, which is a passive investment, it has outbeaten Nifty itself.
Mm-hmm.
This is the graph.
Right.
Over a period of from 2013 till today. Similarly, we did a study on screening and shortlisting of filtering based on Sharia compliance status for large cap funds and tried to see how it compares with the BSE large cap. It outperforms. Same is the case with the mid cap. If you had invested into mid cap stocks, selective. The problem is that 90% of the stocks are not researched. More than 80% of the investors invest without doing a research. Asset management companies, their universe of investment is not more than 300 or 350 stocks. That's the problem. So probably what we need to do is get in touch with people like you who have got an expertise on investment and other advisors who are there, and then recognize and try to do some study and make an investment in a professional way. That's what I have to say. I think that's what I had to say.
All right, perfect. I think we'll have a detailed session on this as well sometime soon, Shabbir Saab, because this is really interesting, inshallah ta'ala. A structured product, a small case, and yeah, so some nitty-gritties of how to go about doing this, etc. Inshallah, we'll have a session on that. Perfect. So yeah, if you could just stop sharing this, we'll bring both of you on. All right. Now there is a question by Tanveer Iftikhar, sorry, and says, Assalamu alaikum, I may be wrong, but there is a huge gap between male investors and female investors. How would you introduce the concept of mutual fund equities, etc., hedge funds, etc., especially to someone from a non-finance background, so the market becomes more inclusive and women can actually benefit from this and secure their future? Who would like to go for that?
I think you are the best person.
Women empowerment, right?
Okay. Women empowerment. Okay. Let me share here some of our experiences. Normally when a new prospect comes to us, we always ask them to come with their spouse. Okay, and it's very interesting when they come with the spouse. First is the reluctance to get the spouse. Second is when the spouse comes, she's always very quiet, but you can see the body, body movements, and then you see the eyes rolling when it comes to some important kind of decisions. So my observation, one of those things is on a lighter side, what we did is sometimes they ask you, nominee mein kiska naam dalna. So they are so ignorant. So I tell them, you can put anybody's name. You can put my name also if you want to. And then those kind of things. So in my experience, I have seen that the ladies or the women are more pragmatic. They have an urge for saving. They think about it for the long term because they are the ones who think about the security. And would you believe that the number of women advisors has been growing rapidly? The number of award winners in our faculty, this from the advisors kind of thing, I see there are a lot of women advisors who are becoming more successful than the men itself. A threat to the men, but yes, we need to take it.
All right. Naveed bhai, would you like to talk about women empowerment?
In terms of taxation, not much like before. Before there were separate slab rates.
Yeah, nothing as such, right?
Nothing exceptional. now it's indifferent regardless of who you are. Yeah,
Okay.
regarding empowerment, I'm not the best person to speak on this topic.
All right. So we'll let you be, no problem. Right.
Yeah, there's another question. Tanveerul Haq Kamal,
Ji,
he
ji.
has asked that to avoid these interest on savings, we have an option to open Federal Bank's Noor current account. I have
Yeah.
opened and operating it. Over here, I would like to, just opine that the purpose of not getting into riba interest is not to make the bank even more stronger. So here, what is happening is you're opening a saving bank account. You are allowing the bank, you're giving him more leverage to earn more out of your money. So I don't know. I personally
I,
felt that.
I have a view on that. Uh, you know, if you look at money, money is supposed to work.
Hmm.
You know, you should not keep it idle. Any kind of
Yeah.
an asset.
Right.
So when we have and that is one basic point. The second basic point is, as a Muslim, you are supposed to participate in or take a risk sharing or participate in equity or risk sharing. If these two elements, if you think about it, it is important for you to make an investment, not into just savings account, but the opportunity that I talked of, where it is a low risk, but you make an investment. If you're not taking a risk, then it is not Sharia.
Hmm.
So you should make this opportunity, and there are opportunities.
Right.
Why should we not invest?
No,
Exactly.
why not open a normal saving account, use that saving account interest and give it to some poor? Why make the bank even more
That's
happier?
what we have been doing. So that's what we've been doing, and we're not participating in the equity market, in the capital market, in one market where it is permissible for us, and there are no restrictions from the government when compared to the 5 regulators. Stock market, SEBI is only kind of a regulator where there's an opportunity for you. That is what Islam says, that you need to make an investment, not keep the money idle. Why not participate in the equity?
Right. Right. So
That's what
ideally,
has to
the
begin.
money, the money should be invested.
Correct.
It should not be sitting in the bank.
Correct.
Noor account or non-Noor account doesn't matter.
Yeah.
But there are situations where you ought to keep the money somewhere, and ideally it's a savings account, current account. Now current account for individuals is becoming more and more difficult. In the past, we used to open it very easily. So that's where Federal Bank has stepped in with an obvious agenda to get a bigger portion of the savings. And so if you ought to keep it, then rather keep it with a zero interest account. The whole idea is, first and foremost, most important thing, just invest it. If not, keep it in this kind of an account, so at least you are not earning interest. Now there is a lot of debate on this. A lot of opinions are available on how to go about with this, but we'll keep that for another day. And let people happy, who are happy with the Noor account, stay that way, not a problem. There is one more question. About the employees part. There's a question about the employees part and the interest of that in a provident fund. So
Yeah.
how do we deal with that? If you, Shabir Sahib, you can just talk about that.
Okay. One of the new changes which have come in the budget is, I think I should have touched on that, is for the effect from 1/4/2021, the interest on contribution to the Employees Provident Fund. Now, whether it is mandatory or voluntary, if you club the amount, if the contribution is more than 2,50,000, the interest on that will become taxable. I'll repeat it. Contributions to Provident Fund over and above 2,50,000, the interest on that will be taxable. Now, the reason why they have done is, I think it is to bring at par with either mutual fund. Again, let me come in and then say that those who have been contributing to the Employees Provident Fund, it is an opportunity for them to come out and invest for a long term into the equity markets or the low risk kind of a thing, rather than to put in the Provident Fund. The only two products which are available now where it is triple E, what we call is exemption at the time of entry, exemption during the investment period, exemption at the time of exit. There are only two, SSY and PPF. These are the only two products in my knowledge which will there to continue. So I think it is more to moderate and then keep in line with the other products. Am I right, Navi?
Yes, yes. It is just to bring in parity between all the products.
Correct.
And what used to happen is a lot of my clients used to invest voluntarily. They used to invest 5 lakh rupees, 10 lakh rupees, and the interest on that was exempt. So what was happening over there is people with more money were parking money, and the interest on that was completely tax free. So they were putting 5 lakhs, 10 lakhs, 15 lakhs, and even voluntary was exempt. No, that's the reason.
Especially among the IT staff, I've seen it. When they give a package, they give a package structured in such a way, and the employees are happy paying that this is going to the provident fund the long term.
All right.
So it's time for you to think.
And this will have impact only on 1% of the PPF contributors, because the amount is very high. It comes around 20,000, 21,000 per month. Yeah. So
Right.
that amount contribution, whoever is doing, is actually in a creamy layer of salary already.
Right. There's one question. I think you mentioned about the zero coupon
Yes.
infrastructure bond, and someone, so Tanveer ul Haq is again asking about zero interest loan for business, where the opportunity for ethical investors to get the tax benefit. So if you could just explain that zero coupon bond and tax saving again, I think it would be clear for all the
Zero
participants.
coupon bonds is something which the government is coming out with an instrument where it will come in like tax-free bonds, like tax-free bonds. This will be a zero coupon bonds for the infrastructure. We'll have to look into the fine print in the details before we comment to find out whether it will be Sharia compliant or not. But I am expecting that maybe there may be an opportunity window for us. That is one. When you're talking about the zero loan there's no opportunity from the government or in the budget for the zero interest loan. I don't think there's anything there.
All right, perfect. Yeah, so no, it's not a loan, clearly. Ishtiaq Noori is asking, what's your view on the NPS, National Pension Scheme? Some of the companies match the investment done by the employee and over and above the salary. So, yeah,
NPS is not Sharia compliant at all. Who says it's NPS requirement? Because you have a choice. Even if you have the maximum that you can invest in equity is 75%, number one. But even in the 75%, whatever the equity shares you're buying, they are not compliant. They may or may not be compliant. So again, we come back to that question, should we make an investment in NPS and do the purging? When I say that for ELS 3 years, it is not beneficial, how can it be beneficial for the long term?
Right.
So there's no opportunity. There's no opportunity today for a tax saving scheme, under tax saving scheme for faith-based investors of Muslims.
All right. So your remedy is pay the taxes, invest the remaining amount.
That's what I would suggest, I would recommend. And same thing, just on the last point to touch it, on the health insurance, a lot of people keep asking whether health insurance is permitted because majburi hai, there is such a bills which are there. Let me share with the forum to say that we have asked this to some of the scholars, and the scholars have said that if you can afford it, it is not permissible. It is permissible, or they can take a health insurance only for those people who are below the poverty line, who have absolutely no option and they have got a burden. My view is, as an advisor, what we advise is when you're preparing a goal-based planning for your retirement, for your child's education, etc., why don't you have a goal for your medical expenses at the time of retirement or during the old age? That is one option. Second option, probably I would recommend and started talking about is, see, Allah subhanahu wa ta'ala is always there to help you out when you go on his way, on his direction. Instead of paying for 25 years premium of 25,000 a year and being healthy, only in the expectation that God forbid something happens to me, that's going to be a recourse. Why don't you pay 25,000 per year as charity, as sadaqah? Allah subhanahu wa ta'ala will take care of your health. That is what I started thinking about it. Saste chutenge Allah ke paas.
That's very good. Yeah. Beautiful thoughts. Instead of paying premium of 25,000, give 25,000 in sadaqah, and that should and with the
niyyah to say that Allah subhanahu wa ta'ala, please protect me of my health. You are the creator. You do your dua. Yes, Allah subhanahu wa ta'ala will definitely care.
Inshallah. That's good. And some part of that 25,000 charity begins at home.
Correct.
So spend some money on proper health and wellness regimes, walks, etc., rather than paying that health insurance. Perfect. All right. So if there are any other questions, I think the questions have all more or less been answered. It's exhausted. 15. All right. There is all right. This is all done. This is taken care of. Yeah. So there are no more questions. Maybe it's a good idea to maybe start concluding. So besides the budget, today we just not discussed the budget, but we got a cross section of ideas on Sharia compliant investments and tax savings and health insurance, and when we were all over the place, but the budget probably gave us that impetus to have this kind of a discussion. So I'm really glad we had this, and inshallah going forward we can continue to have these kind of sessions where maybe at one point of time we can have a panel of advisors, at another point a panel of chartered accountants and our scholars, and deep dive into some of those issues that are so pertinent for the community. There is one question that has just come in now. How is setting this percentage? Okay, so there is a question on Sharia compliance, that how is the percentage decided in the Sharia compliance and issues of that nature. So I think let's leave that for another day. Irfan Sayyed, he's asked a question that what about life insurance? Is that allowed? So would you like to give a quick word on that, Shabbir sir?
I don't think life insurance is allowed. When you're talking about medical insurance, which is the primary, see, you're trying to talk of protection. First thing people need to understand is when I talk of insurance, they think it's an investment. Once they understand the difference between risk purchase and investment, it becomes very clear. Right. So insurance is risk purchase, not an investment.
Absolutely. Yeah. So so the next question, follow-up question by Irfan Bhai, is that how does the family sustain after a person is dead and gone? So for that, I think the solution is building your portfolio over a period of time. Do SIPs, do some kind of stock SIPs, keep all of that in place, because that value of shares is what is practically handed down to the nominee and the inheritors. That is the insurance that you should really aim for, inshallah ta'ala, right? Is this a good time to purchase gold? 53,000, 55,000?
I would recommend purchase of gold by way of SIP. Have a minimum of 20% allocation in your portfolio for gold, because that's going to be a hedge against the equity, since we don't invest into the debt. And over period long term, I've seen that if you have a combination of equity and debt, it gives an equal return.
Right, good. And so while we are on this, I personally, so when it comes to debt, I personally suggest Rehbar, which offers rent-based returns and not necessarily a capital guaranteed product, but the capital, because by virtue of the kind of investments, is relatively safe. So how would you pitch Rehbar as a option for debt, as a replacement for debt?
I think Rehbar's or investment is good. One is from the regular income point of view. Two is as part of diversification. But when it comes to what you call it, cumulative investment, probably there is some drawback. But yes, it could be a part of your investment portfolio. One, because of Sharia compliance, and I think we need to encourage all Islamic products which are coming in the market, because those people who are coming out with these products have sacrificed for the community and they have come in the market. It is for the investors and the community to support them. I know of many people like you who have given their life kind of a dedication and commitment to this cause. So I would recommend all those who are within the regulatory ambit, all those who are have got a professional background, all investors and the community should support them.
Right. So ideally, from a support perspective, yeah, it is important. All right. I think we are more or less done with the questions. So maybe just last few words, Naveed Bhai, and then Shabir Saab. So before we conclude, inshallah, overall on the budget and the general scenario.
Overall, there were many budgets throughout 2020, so this was expected. More or less, I knew that there will be not much that will be given by the government. Yes, one major thing which happened for the first time in the parliament was that they accepted that this is privatization and not disinvestment. So, since a lot of time, what was told was it was disinvestment. Disinvestment, if I'm not wrong, is one public company buying another public stake in another public company. That is more or less called disinvestment. But this is for the first time in the history of India that a lot of 23 public sector undertakings, a lot of private institutions will be sold. Yes, there will be a lot of efficiency, but then these are all national assets, and the deficit, we have a deficit of approximately 9.5% is the fiscal deficit this budget.
Right.
And to bring down that deficit by 1%, it's going to take the expectations are that they're going to bring it down in the next 4-5 years to 4.54% as the fiscal deficit. The only options left with the government to bridge that gap is to sell off the assets which are there within India. So that's the only, in the long run, I don't know whether this will be beneficial or not, probably with the efficiency, but then the major chunk of poor people are going to suffer a lot because of this. That's the major disadvantage of selling off these public sector units. Apart from this, I'm happy for the middle class people that there was no cess, there was no wealth tax which was reintroduced. I thought there will be some kind of wealth tax which will come, or maybe some kind of COVID cess or surcharge which will come. So luckily this didn't happen in this budget. And in terms of taxation proposals, nothing has changed. It's just the same. Nothing has changed.
Right.
Nothing drastic. 1% company was something which was very important. I think many Muslims, many other people who have small time business operators, small scale business, who are doing proprietorship business, they should explore this option. And apart from that, yes, the audit limit has been increased from 5 crores to 10 crores. That means the government sees that there's not much value that a chartered accountant is adding while reporting and qualifying the audit report. Even this is bad for the chartered accountants, that we are not qualifying the audit reports much, that the government feels that rather whatever data we get through income tax filing is as good as what we get in the audits. So no need of the audits, no longer the audit is required. Faceless was a little bit of a hurry, I felt. They should have waited for another 2 years, taken feedbacks, seen how it goes in the first appeal with the Commissioner of Income Tax Appeals, and then later on gone to the tribunals, because it is quasi-judicial. Now I need to know you, I need to understand you to make my point. When I am in a faceless thing, it's very difficult for me to put through my point. It is quasi-judicial. I'm expected to go represent my client, sit in front of the officer and actually represent him and argue. Maybe sometimes, your body language suggests a lot of things. You are able to make things understand, and which is not necessarily that easy to explain it on a piece of paper. So there will be a lot of harassment on the SSCs, and that's what government doesn't want. That is the reason they have come up with Vivad Se Vishwas. So they want to bring down the litigation. That is one thing which is good with this government, that they don't want all the litigations to keep going on. They're not going to go anywhere because of that. Overall, I would rate 6 on 10 for this budget. Not much that was expected from this budget any which ways, because a lot was given, or probably liquidity was given in the past. It was not even, it was told that 13% of the GDP was given as the package during the COVID times. But these 13% actually included a lot of leverage in the perspective of liquidity, like loans and other schemes. So these are to be returned in future. So you cannot call this as a package. Overall, as expected, the budget was the way it was. It was not much for in terms of taxation.
Right. All right. So that's a very comprehensive conclusion. Shabir Saab, if you could just give your last thoughts.
Yeah, I think I would close with my opening remark of saying that have your own family budget,
Budgets,
and give family budget and give a priority of family budget. When compared to the union budget, that is one. Two
Right.
is that I would ask everybody to have their own goal-based thinking and then planning. Third is that digitization is the way forward. We need to understand and move towards digitization. Be within the umbrella of the regulation and the laws. Avoid cash transactions. Document it. We have come out from that age-old kind of era. The more you disclose and have a budgeting and an accounting kind of a thing, the more reliefs you get. That's how I have it.
Perfect. Thank you so much on that one. Go digital, have your family budget, not just have it on paper, implement it, make sure everyone implements that, and then go digital. Have you, instead of proprietorship, have one-person companies to begin with, and then build up to private limited companies, etc. So that's the way forward, getting involved in the mainstream rather than living in that cash economy. That's the way forward. That's the thought given by CA Naveed Mullah, MS Shabir Sahab, and I think let's build up on that. Jazakallah khair to our panelists and all our guests for staying up so late, trying to understand the intricacies of the budget, investments, Sharia compliance. And on that note, we'll conclude. Jazakallah khair. Subhanakallahumma wa bihamdika wa nashhadu an la ilaha illallah wa nastaghfiruka wa natubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.